Hello, 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 ladies. This podcast is designed exclusively for you. This is Her Talk Show, where we dive into inspiring thoughts, ideas, and stories, all with one purpose: to empower and uplift women like you. I am Sabrina Victoria, your host and guide on this journey of self-discovery and growth. I invite you to hit that subscribe button, follow, like, and share. Together, we are creating a vibrant community of empowered women. Get ready to unleash your brilliance. Her Talk Show starts now.
We come to you every day with the best speakers, relationship coaches, spiritual mentors, trailblazers, business owners, authors, young hustlers, podcasters, entrepreneurs, fitness trainers, therapists, financial advisors, and more. We ask our guests one question: what do you know that I don't know? Get ready, because today's guest is about to change the way you view your world. This is Her Talk Show, hosted by Sabrina Victoria.
Hello, and thank you for joining us today for this episode of Her Talk Show. I already see so many people jumping on live. Thank you. We have interviewed over 500 women on this stage, and we are adding another one to the list today. If you are listening live, welcome. And if you're listening on the replay, make sure you hashtag replay wherever you're at so we can send you some love in the comments. Either way, if you are watching this video, we would so appreciate it if you shared it so we can get more eyes and more ears on the awesome content that we are about to share today. So today we're speaking with an amazing woman, Angie Aki. Is that right?
Aki.
She told me beforehand. Angie Aki has been a real estate investor for the past 5 years. She left a successful pharmaceutical sales career in 2019 after 18 years in corporate America to enter real estate investing full time. Yes, this is when she discovered passive real estate investing and fell in love with it. She currently invests both actively and passively. She has successfully executed over 100 real estate transactions as an active investor and has an equity share in over 1,500 doors as an operator, co-GP, fund manager, LP, or lender. Her goal is to help as many people as possible live the life they desire and deserve by identifying and owning their dream and following it. One of the ways she does this is by helping people passively invest in real estate so they can create truly passive income and focus on what is important to them. That is why she funded Ohana Investment Partners to bring the magic of passive real estate investing to as many people as possible so they can grow their wealth alongside her without taking on another full-time job. I totally get that. So excited to have Angie here with us. Thank you.
Thank you for having me, Sabrina. It's a blessing to be here.
Yes, thank you so much. I appreciate it. And I'm super excited to dive into this subject. I think this is a subject that a lot of people have questions about, they're curious about, but don't necessarily know a whole lot about it. So I thank you so much for taking some time out of your day to sit down and chit chat with us. So the title for today is The Magic of Passive Investing.
Yes.
Why are you bringing this to us? Why is this so magical?
I am bringing this because it is something I didn't know about until I was in my late 30s. And I wish, right? Hindsight's 2020. I wish I would have known about it in college or beforehand. And it's so powerful and it has treated our family very well. And so if it works for our family and then allows me to grow my wealth, then it should allow other people to grow their wealth and other women and other families. So I truly believe it is magical. It's something that quite frankly isn't talked about as much as it should be talked about. So I am here to talk about it, to shout from the rooftops and tell you that you can invest in real estate passively, make money passively, and all the while do what you love or want to focus on.
Absolutely. I do want to make a note here. Somebody just said, I missed this. No. You didn't miss it. You're here live with us right now. So we're here. So if you want to jump into the comments or you have anything to add to the conversation as we go along, feel free. So how did this come to be? I know I talked about it a little bit in the beginning, but can you share, how did you even bump into this? How did you figure this out?
So I was in pharmaceutical sales for quite a while, and I got interested in real estate investing, ended up going through a mentorship program, and while I was working full time, and started focusing on real estate investing. And during that mentorship, I uncovered private lending, which is where you can, in essence, lend on an asset. In my instance, it was a single family house. It was for a flip, backed by a physical asset like real estate and a recorded note and a mortgage. So I was lending money. And so for this instance, I don't remember exactly how much it was, but let's just say it's $100,000 being lent. You have a note and a mortgage with terms, just like you're paying your bank for your mortgage on your house. It works the same way, but you are the lender. And so that's how I get introduced to it. And then as I started spending more time in real estate investing and uncovered commercial real estate investing and multifamily investing, then I came across syndications, which is basically a pool of investors. So if you think of a lot of women pooling their money to buy a larger asset, like a 280-door apartment complex or a storage unit or a short-term rental portfolio or something like that. And the LPs or limited partners are lenders, and they make money 100% passively. And in that example, they're not only getting a specific percent return on their money from a preferred return or interest per year, but they're also getting an equity piece.
So are you saying, like, first of all, where do you find these people? So everything sounds wonderful. Where would you find a group of people that wanted to get together to invest in something?
Well, you're talking to her right now, so that will help. It's a lot of it is networking, and realistically, it is talking to people like myself. I'm a syndicator, so I am a person that pools investors together. So, whether or not you're investing, it may be a group of girlfriends or not. And sometimes people do that, but you may be investing with 100+ people across the nation that you don't know. You're investing in an entity, and it's my job as a syndicator to bring people together, to pool them together for this investment, and then provide the asset management, the communication, and everything that goes along with it. So you can talk to me always.
Syndicator meaning like the orchestrator, the person who is the backbone and taking care of. Okay.
Yeah. So if you think of me almost as a connector, because if you're sitting over here and you have money you want to invest, whether you want to invest to diversify out of the stock market, whether you want to invest because you have money sitting in the bank and it's not working for you, or whatever the case is. So you have money sitting over here. We have a deal and a great asset and opportunity over here. My job is to connect the two or marry the two.
Wow, that is so interesting. Now, a lot of times when people hear stuff like this, at least for me, automatically it's like, that sounds real nice, but it's got to be way more complicated than that. How exactly complicated or not complicated is something like this if someone wanted to kind of take a step towards it?
Mm-hmm. So I will tell you, one of the things I say is my goal is to take the overwhelm out of passive real estate investing. So it's like anything in life, you can overcomplicate it and overanalyze it to death if that's what you want or if that's your personality type. It can be very simple and straightforward. So one of the things that I do as people take a step towards passive real estate investing is doing what I'm doing today. It's a lot of education, providing people with the opportunity or the offerings to look at and start, answering questions, providing them with terminology, helping people understand what they're looking at when they're looking at returns and what that means, what they're looking at in an investment summary. And that may sound like a lot, but it really isn't, I promise. It's very simple and straightforward. And once you have your investing goals clearly defined and you know what you're investing for, are you investing for cash flow and you want money coming in every month or quarter? Or are you investing out of your self-directed IRA and you don't care, your goal is equity? Then that will help you define which offerings or which opportunities are best for you, because there's no blanket answer. It's all based on your needs, your family, your season of life.
Got it. So if somebody was interested, for instance, myself, that's interesting. Something that I've always wanted to do was to get into exactly what you said, multifamily type of buildings. What's my first step? Am I supposed to go around scouring the United States of America for a building?
No. Your first step is to reach out to me and say, hey, I'm interested in potentially investing. Or if you go to my website, which is under my face here, if you're looking at the video, you can go to ohanainvestmentpartners.com and you can click on Invest with Ohana Investment Partners. And it will take you to, I think it's a 5-question form. It says, okay, are you interested in investing? I have to have some type of basic financial information so I know which offerings are appropriate for you. And that's the first step. Then you will start receiving offerings and you can look at opportunities that are available. By signing up as an interested investor, you'll also get a handful of introductory emails. And no, you're not going to get spammed, but it's about 10 emails that provide some basic education and some basic resources that you need so that you can make an informed decision. But that's it. You sign up as an interested investor and there's no fee to sign up as an interested investor. There's no obligation. There's no pressure. The way I approach this is truly like I have a gift of passive real estate investing, which I truly believe is magical. And I wish I would have known about it sooner. And my goal is to get this gift to as many women, as many families as possible, because as hokey as it may sound, I believe when women have money in their hands, amazing things happen because we pour into our families, we pour into our communities, and we truly can make a difference. So this is yet another way to bring money into your household and your communities.
So you said there's a few basic things that someone would need, like to fill out the initial form. What are those few basic things that somebody would need to come to the table with to know before even working? Like what's the initial?
So you don't have to know anything, but I need to know kind of what your financial situation is. So the way, and we fall under SEC parameters. So offerings are sent out to accredited investors and or non-accredited investors. So I need to categorize whether you're accredited or not. You're an accredited investor if you make $200,000 a year and have for the past 2 years and expect to this year, or $300,000 with your spouse if you're married, or you have a net worth of over $1 million, not including your primary residency. And there's a few more things that go into it, but that's the basic premise. And some of the other questions on the forum is, when are you looking to start investing? Because that helps me determine, are you looking for something today? Are you looking for something a year from today? And also, how much are you looking to invest? Are you looking to invest $50,000? Are you looking to invest $500,000? And then also, where are those funds coming from? Are they coming from a cash account? Are they coming from your entity? Are they coming from a retirement account? Because that helps me as well. So those are the basic questions just to get you access to the investment offerings that I have available. And then as part of that process, the next portion is to schedule a call with me so we can have a conversation much like this. Say, hey, Sabrina, let's walk through the questions. Let me understand more about where you are in your season of life and what you're looking for and what your goals are. Because the more I understand that, my job is to go out and find offerings that meet the investors I'm working with to meet their goals. So the more I understand what you're looking for, the more I can go out there and find that offering and bring that to you. Did that answer that question for you?
Yeah, 100%. Thank you. And I want to ask, I know that you had spoken about ERC funding at some point. What is that?
So that is totally separate. I like to think of my business almost in 3 different pillars. It's the Employee Retention Credit Funding Program. It is a payroll tax credit that is under the CARES Act and available for small business owners with 1 to 500 employees that had some type of impact to their business from COVID. And there's an eligibility. I'm affiliated with the second largest processor of these funds. There's an eligibility questionnaire that takes less than 10 minutes. And if you're a business owner and you haven't determined whether you're eligible or not, I highly recommend you do so, because you can get up to $26,000 per W-2 employee. It is very impactful. I've worked with a lot of businesses. I'm based out of Orlando. I'm a native Floridian, so just naturally I have a lot of connections in Florida. So I've worked with a lot of businesses in Florida on this tax credit, on this payroll tax credit, and it has been amazing for businesses. So if you're a small business owner and you have W-2 employees, please reach out. I'm happy to walk you through it and get that questionnaire to you.
Wow. Is there a cost to that?
No cost to determine if you are eligible. There is a fee for the processing. Once you put all the information in, it takes about 2 to 3 weeks to determine the exact amount. And then the company I'm affiliated with, they have to amend the 941s, file with the IRS. They have a direct integration with the IRS, and there's quite a few things to go into it. But no fee is required until you get the funds back from the IRS, until you get your payroll tax credit. So nothing is due. And nothing is due if you just want to say, hey, am I eligible or not? And then you're like, well, I don't know, maybe I'm not, or I don't know. There's no obligation. Your fee is only due if you say, yes, I want to move forward. I want to move forward with this payroll tax credit, and I will pay when the IRS gets my funds to me. And that way you're not out of pocket any money at all.
Wow, that's awesome. Very cool.
Yeah.
Back to the real estate. So an individual who is possibly looking at doing something like, or getting into investing in general, what is the benefits of investing into real estate versus investing into just stocks?
So many, in my opinion, but I will tell you. So some of the benefits, your investment is backed by a physical asset. Some people love the stock market, some people don't. My preference is real estate, so I'm a little bit partial, to be totally candid. But your investment is backed by a physical asset. It's backed by real estate. When it's backed by a commercial real estate asset, that's very different than a single family asset, because it is backed, the way commercial real estate is valued is based on financials. So you're looking at revenue coming in minus expenses. You're looking at your net operating income and your cap rate, which is there's a way to figure that out, right? But really, if you just understand commercial real estate is based on finances, it's black and white and it's very logical. That provides an additional security for your investment. There's also, because it's real estate, you have depreciation that you're able to take advantage of. And because you're investing into an LLC, there's depreciation and it's a pass-through entity. So we can do things, for instance, cost segregation study, not to get too high level, but that allows for bonus depreciation. So that allows us to depreciate the asset or parts of the asset much faster than we typically would. And we can provide our investors what we call a paper loss. So you're not actually losing money, but you're losing money on paper. And that you take to your accountant and say, hey, Mr. and Miss Accountant, here's my K1, here's my paper losses. and that can help decrease your taxable income. So it's very impactful specifically for high income earners because you can passively invest and it will allow you to decrease your taxable income. So most of us, if not all of us, are looking for ways to decrease our tax burden. And the answer is not. I had one accountant years ago. I'm not with him anymore, but I said, "Hey, I'm hitting like top tax bracket. What are we going to do?" And he's like, his answer was, "You should make you should make less money." I'm like, that's not an answer. That's a poor answer. But had I known, and he could have said, "You should invest in real estate, or you could passively invest in real estate," that's a great answer. Opening a business is a great answer also. But a lot of people, if they're working in their careers, or even if they already have a business, they don't want to open another business. So this is a great way to be able to decrease your tax burden. And disclaimer, right? I'm not an accountant. You should get tax advice, all that good stuff. You're muted.
Thank you. So I love this example that you just gave of making too much money, because that is a thing.
Mm-hmm.
I hear that. I'll hear people say that, like, "Ooh, I'm being real careful with what's going on right now, because if I make too much, then I fall into another one."
Oh, yeah.
So they're trying to make less
Mm-hmm.
sometimes heading into the new year because they don't want to hit that next tax bracket. But you're saying, girl, make all the money,
mm-hmm.
and then just find another way. For instance, mm-hmm. this is a way to invest that money.
Mm-hmm. Right. Yep.
So you don't get hit.
Yeah. Go make all the money. You deserve to make all the money in the world. You absolutely do. You also deserve to take advantage of the way that the tax system is set up and legally follow the tax system. And real estate, there are a lot of benefits to investing in real estate. So there are a lot of tax benefits, and that can flow to you through passive real estate investing or active real estate investing, if that's what you want to do. A lot of people don't have the time or knowledge to do that, and that's okay. You can still invest passively and get tax benefits. So yes, go make all the money. By all means, go make more money. And don't, everything is how you look at it also, right? Like if you're in the top tax bracket, do you want to make less so you're in a lesser tax bracket, or you say, F it, right? I'm going to blow this out, just blow out of the water and make so much money, and I'm in a 40% tax bracket, but this is, at least I'm making a lot of money, right? And then do things like passive real estate investing to bring that down. That to me is the right answer, right? Like go make money.
Yeah, 100%, definitely. And I think a lot of that is just lack. And a lot of it is kind of like what you opened up with, where you were like, it's all about educating people. Like people mm-hmm. just don't know that there's other things.
I didn't know.
Yeah.
And it, until we start talking about it, and I say this all the time. I speak a lot in-person events and speak on podcasts as well. But until we start normalizing how we're making money, how we're saving money on taxes and things like that, it's, it doesn't help other people. So we have to talk about how are we making money? How are we lowering our tax burden? And then we all grow together.
Yeah, definitely. And this is also just kind of opening up another avenue. Like, for instance, I live down in South Florida. I live in Boca Raton. It's really freaking expensive right here. So if you have an extra 250 grand, you can get a little itty bitty condo.
Yeah.
Or linking up, partnering up, networking with somebody like yourself, you can then take that 250 grand that's laying around mm-hmm. and invest it into something that's bigger mm-hmm. and brighter and more fun.
Yep. And no work. So what if you could take that $250,000 and double it in 5 years? Because that's our goal. When you look at the returns, that's our goal. Or with interest rates, we come really darn close to it if we don't hit the 2x equity multiple to double your money in 5 years. So what if you could take that 250, do nothing? Nothing. You're just doing whatever, raising your family, running your business, going on vacation, doing whatever the heck you want to do. And you have the potential to double that money in 5 years. And you can diversify across, you don't have to put it into one syndication. You can diversify and say, I'm going to split it up into 2 or 3, or whatever it is. Depending on the minimums, you may be able to split it up into 5. So you're diversified across different asset types, asset classes, location. In every offering we roll out is in the Southeast United States or the Sunbelt states. Because when you look at the migration patterns and you look at the employment patterns, that's where everyone is moving.
Wow, that is absolutely phenomenal. And what a great vision for the women here in her nation, and for those that are listening live, as far as really being able to make like dreams more attainable than previously.
Yep. Absolutely. Absolutely.
What are you finding as far as women understanding and jumping into something like this? Is this something that women are feeling comfortable getting into?
Yes, I am working on education and getting the word out to more women. So one of the, I'm doing things like this and talking to your community, right? And that's so important. I'm talking to as many women as possible, because when you look at money is changing hands. Money is moving from the hands of men to women. I don't remember the numbers, but it's like trillions of dollars in the near future will be in the hands of women. So my goal is to increase people's knowledge, to increase people's confidence in what they're doing, to help them understand when you're looking at an offering, this is what you should look at, or here are some key points to make sure it matches your investment goals. And so I'm seeing a ton of reception to this. And because quite frankly, and I know this is how I work too, there's not a lot of women in this space. And I know personally, I would rather work with other women if given the choice. So I find I resonate with a lot of women. And there's, like I said, there's no pressure. If you can't invest, and you may not be able to invest for 5 years, you are still just as important and valuable as someone that has $500,000 to invest today. So it's all, we have to educate together and rise up together as a community. And I am clearly very passionate about that. I will get off my soapbox, but it's important. And the message has been very, very well received.
That's beautiful. And then you kind of touched on it a little bit, but I think it wouldn't hurt to maybe expand for a moment. The difference between investing in a single, like perhaps a small single family, or like in my case, a little tiny 1-bedroom condo, and investing into something of the sorts of what you were talking about. What are the benefits of linking up with you or someone who does what you do versus just buying one little thing by ourselves?
So there's pros and cons to both. But if you're investing in a single family, is my internet a little slow? Is that weird? You're okay on your end. Perfect. Okay. If you're investing in a single family, it's going to be very hard pressed to be able to find a way to invest passively into single family. The primary way you can do that is through private lending. And so that's backed by a note and a mortgage, like I talked about at the beginning of the show. And so that basically you're getting an interest rate, and that's okay. And you can do that. Those are harder to find. And you want to make sure if you're looking at the risk, your risk is in one unit. So if something happens with that unit, if that tenant moves out or that flip doesn't go well, all of your eggs are in that one basket. Where if you look at commercial, and you look at whether it's, a short-term rental fund, which we had last year, we had over 75 units in it. Your investment is spread out over 75 short-term rentals. So you're not worrying about if your average daily rate is down here, your occupancy is a little down because, oh, by the way, there's the Super Bowl in Arizona, and those average daily rates are sky high at that time, right? So it's balancing out. Or if you're looking at multifamily and it's a 280 unit apartment complex, then you may, maybe you have 20 that are vacant. That's still not even 10%. So you still have all these others pumping in cash flow. And there are so many things to do. We call it forced appreciation. You are more in control, and you being the sponsors. Okay, so you're investing with people that do very well in asset management and property management. But as sponsors, we can force the appreciation. So we can renovate and increase rents. We can do things like garbage valet. And if you've ever lived in an apartment complex, you will pay the $30 a month to have someone pick up your garbage from outside your door and take it to the dumpster. It's something so small, but it adds up so exponentially. We can professionally manage and decrease the expenses. And by doing all that, we're forcing appreciation, because all of that is impacting our net operating income, which is how commercial real estate is valued. So your risk is much more mitigated when you're looking at commercial real estate investing versus single family, in my opinion.
Beautiful. And then for anyone who's listening live or on the replay that wants more information, or maybe wants to fill out that form, where should that person go?
So you can go to my website, ohanainvestmentpartners.com. And you'll see at the top, it'll say invest. Click that button and fill out the form. And if for some reason you can't find it or whatnot, just shoot me an email, Angie at ohanainvestmentpartners.com. I'm happy to help you. We can schedule a call. I can answer any questions you have. So much of this is about education and increasing your confidence so that you feel comfortable going into an investment that is going to generate wealth for you.
Beautiful. And then for those that see this in their future, but maybe just aren't there yet, where can someone follow you? Is there a place online where you're speaking about this often, where people can have you in their feed?
Yes. So I am found under Angie Lee Akee on Facebook, Instagram, and LinkedIn. So whatever your choices of social media, those are my primary three.
Angie Lee, Lee. Akee.
Yeah.
And that's Facebook and what?
Facebook, Instagram, and LinkedIn.
Let's see if I did this right.
There you go.
Yes.
Well done. Yes.
I love it. Well, this has been absolutely fantastic. As we're wrapping up here, why do you do what you do?
Oh gosh. I really just want to help people. I'm a believer in abundance, and if I know something and it's serving myself and my family very well, I believe if it can serve you and your family well, it is my job to get that message out to you. And I'm failing if I don't. So my job is to get it to you, and then whatever you do with it is your responsibility. So this is my responsibility, handing it off to you.
Yes, that's the way that I work too. I love that. Well, this was absolutely delightful on so many different levels, not only for myself, but I know for my audience, and also just a different avenue for those that are living in the fear of the tax bracket. That's a real thing that I hear all the time. So this opened their eyes to a different way.
Yep, absolutely.
A different way. So instead of minimizing, expand, girl, expand.
Get it. Yep.
And then give Angie a call.
Yep.
I loved this. If you resonated with Angie and all the goodness she shared today, make sure you check out her website and her social media. She hangs out on Facebook, Insta, and LinkedIn. All of the information is in the description wherever you're at, clickable links, and also below her face area. This brings this episode to an end of her talk show. I want to extend my heartfelt gratitude to our amazing guest speaker, Miss Angie, for sharing her wisdom and inspiring us all. To each and every one of you, our dedicated listeners, thank you for staying with us until the very end. Your support and engagement means the world to us. Make sure to follow, like, and share. Join me again for our next episode of More Cultivating Stories. I am your host, Sabrina Victoria, and I invite you to join our amazing community, Her Nation, where we continue to have transformative conversations just like this. Until next time, as always, do something